I'm so excited about this because over the course of the 2 years we've been doing this show, we always mention, I think, on every single episode, how you have got to stack your tool belt with the right tools. And by goodness, in 2023, I found a killer tool that came from a totally different perspective as it relates to taxes, but also when you apply it to investments or business sales, valuation, and so forth. Look, us as real estate brokers have been missing a huge benefactor. We titled this today, How to Help Your Clients Get the IRS, 50% of the IRS money to buy investment property. Well, that's what James Harnsberger is here to do. James is out of San Diego, California. However, he is an enrolled agent servicing the entire United States. He's done a little bit of work outside the US as well, but primarily here in the US. And you're not going to want to miss this all. James, thanks for coming on board. I know you are a super busy guy because you are in it to win it. And the loser is the IRS, right?
That's nice to hear for a change.
Yeah. And you make a very good point. I mean, that's the name of the game is winning and losing. It's not about, playing nice or playing rough or anything like that. At the end of the day, if you can't win, then you're going to be giving up a lot of your wealth in unnecessary taxes that are just crazy. It's insane what people are doing.
James, you're an enrolled agent and a CBA. I want you to explain to everyone what exactly that is, because it's more than what it appears.
Yeah. So an enrolled agent is actually someone who has passed successfully all 3 bar exams to be admitted to practice before the Internal Revenue Service in all aspects of federal tax law. Criminal tax law, civil fraud, corporations, partnerships, LLCs, sole proprietor, collections, enforcement, fraud investigations, appeals, amended returns, tax preparation. Every aspect of federal tax law is required. And then you have to take these 3 admissions exams to be admitted to practice, and then go through an extensive financial background check, because this is all run by the Department of Treasury and the IRS. And so
that sounds exhausting.
It's a hill. We're not just tax preparers or return preparers. I mean, we do tax preparation, but more importantly, my job and most of my expertise is in the business reorganization, small business, commercial real estate, multifamily, investor, and crypto. My big specialty in the tax side of it is IRS appeals. I handle all of the large dollar cases. So if you, like a recent couple out of Las Vegas, they owed the IRS $3.7 million. I took the case on appeal and reversed, after about 30 months, we reversed the 3.7 million down to 0, and we clawed back from the IRS about 700,000 that the IRS illegally took, and then they had to pay the interest on that back to the client.
Oh, and you're now everyone knows why James is my hero, right?
You're my kind of guy, James. This is sexy tax talk right here.
So
yeah, it's like giving the IRS a spanking.
Well, and I'm going to come from my story too, because look, when I first heard some of the things that were coming out of your mouth, James, I scratched my head and said, all right, I better do some Googling, because it sounds like to me what he is saying is going to get my ass thrown in jail. But it's not that way at all. But there's so few people that I have found. I've had the highest paid CPAs, and if they're watching, I apologize, but you're fired. I've had the highest CPAs for the last 15, 16 years. I have paid an astronomical amount in getting my taxes prepared. Yeah. Not only am I a real estate broker, I'm a developer, I own a building company. There's a lot of different income that's coming in, and I'm paying a substantial amount of taxes every single year. When I hear other people aren't, I'm just like, how is this happening? But, again, it's because we're not educated properly, or we've hired people that just want to send us a bill and prepare taxes and push us off to the next. And since knowing
Right.
you, we're going through a lot of restructuring to where I will have more wealth, because this is
Right.
about building wealth. And I think that aha moment when I met you was when you were giving a conversation, a speak just like this, and we were educating other real estate professionals on stop looking at the property valuation as it's based on the income or comp approach. Let's look at it
Right.
from the tax approach of building wealth. And we've had
Right.
success stories there, but kind of go into that a little bit so the audience understands what the heck it is we're talking about.
You make a very good point, Stephanie, and I think the easiest way to explain this is how you set up your property or how you set up your business is going to decide how you're going to be taxed. So when I'm looking at a business valuation, or I'm looking at a property valuation, or I'm looking at, a compensation analysis valuation, what I'm looking at are the hidden and never revealed tax attributes of the transaction. Let's say that you're a real estate professional. You've got a client that's got commercial property, and they're looking to sell that property. How they hold that property and how they dispose of that property is going to decide how they're going to be taxed. If they're holding it in a certain way and they've held it for 5 years or more, there's a provision in the Internal Revenue Code that would allow us to exclude up to 50% of the gain, up to $10 million tax free. But nobody ever looks at that. And so they've got a $7 million gain on a big commercial property, and they get forced into 1031 because they don't want to pay the tax. And you don't have to do a 1031 if you had this set up the right way, and we can look at that, and you're eligible to make that election. 50% of your gain up to $10 million will be tax free to you. The same way I'm looking at valuation. I've unlocked tens of millions of dollars in hidden value by going back and looking at the tax attributes that nobody's paying attention to, and make a crappy deal actually turn out to be a good deal once you understand the tax attributes. So it's really the tax is the driver and wealth is about accumulating and adding more to what you already have. Getting rich, anybody can get rich, but it's the few people, that the small percentage, that build wealth by understanding accumulation. If I have one apartment building, I want to add another apartment building and accumulate. And that's the principle that the tax attributes really drive. Because if you make $1 million, but you only keep 200,000 because you've got all this tax exposure, then you're not going to be able to accumulate. And so our job is really to understand those dynamics, decompose the financials, and then restate the financials with the tax attributes pre and post tax, so that the investor, the real estate professional, you, Lisa Marie, all understand where that true value is really lying.
And I love that, Lisa Marie. Here's, we've had a multitude of scenarios ever since I've met James about how, one, for example, was a retail strip center. Okay. And look, the rent was okay on it. It was fully occupied, rents coming in. Rents could have been raised, but not in the situation where the leases were already locked in place. It was going to be another 3.5 years before you could see those rents get up to true market value, because the seller was a very nice landlord. However, when James broke it down for my client and showed him the tax savings he was going to have each and every year on top of the income, it made sense for him to go ahead and buy, when we had already had 2 or 3 buyers pass on the opportunity because they didn't see it from that modelization.
Exactly.
Well, and as real estate brokers, we're always told to stay in our lane. We're not attorneys, we're not CPAs. So having a partner like James who can actually speak to a specific deal or a specific business is great, because we are really not supposed to do that.